It started as reward points, small, insignificant digital dust. For most of us, they're just a nice bonus at the end of a transaction. But in the shadows of the corporate back-end, these points were being harvested like a digital crop. A quiet accumulation that went unnoticed for months. A digital harvest that would soon turn into a financial storm. Today, we're peeling back the layers of a multi-million-dollar leak that most companies don't even know they have. Welcome to a corporate secrets investigation, the digital cash leak. What happens when the incentives meant to keep you loyal become the very tools used to dismantle your profits? We begin with a single redemption that changed everything. A single transaction that whispered a warning most were too busy to hear. One that would eventually scream. It was a Tuesday morning when the audit team at a major global retailer noticed a spike, a single redemption. One customer redeeming 300,000 points for high-end electronics. On the surface, it looked like a super user, a loyal fan. But when the investigators dug deeper, the super user didn't exist. The account had been created 48 hours prior. This wasn't a customer. It was a ghost. A ghost in the system that had just walked away with thousands of dollars in pure inventory value. This single event triggered a red alert that would eventually reveal a massive systemic exploitation network. A ghost that vanished as quickly as it appeared, leaving behind only a trail of digital breadcrumbs and a significant hole in the quarterly earnings report. The question wasn't just how they did it, but how many others were doing the same. Loyalty programs are designed to build trust. They are the backbone of modern retail, designed to retain customers and increase long-term engagement. When done right, they can boost revenue by over 25%. But behind the glowing free offers and the promise of VIP treatment are complex systems with hidden vulnerabilities. Systems that are often less guarded than the cash registers they feed. What if the very rewards designed to attract customers are being exploited to bleed your company dry? In the next 15 minutes, we expose the mechanics of loyalty reward misuse. From fake identities to internal collusion, we uncover the hidden leaks that cost corporations millions every year. This is the investigation you weren't supposed to see. The digital vault is wide open and the wrong people have the keys. To understand the fraud, we must first understand the system. Loyalty programs operate on a simple logic. Action leads to reward. Buy a coffee, earn a point, fly 1,000 miles, get a free seat. It's a closed loop designed to foster a psychological bond between the brand and the consumer. But this loop has an entry point. The back-end database. This is where points are birthed, stored, and eventually killed. In the world of corporate finance, points are often treated as liabilities on the balance sheet, but in the world of fraud, they are as liquid as cash. Many systems rely on aging infrastructure patched together to handle modern mobile apps. These patches create cracks that sophisticated actors are more than happy to widen. Let's look at how the misuse actually begins in the quiet corners of the internet. The first phase of the attack is the creation of shadow identities. Fraudsters don't use their own names, they use bots. Automated scripts can create thousands of fake accounts in a matter of seconds, bypassing basic email verification. These accounts are sleeper cells, waiting for the right promotion to activate. They harvest sign-up bonuses, referral rewards, and first purchase incentives without ever intending to become a real customer. We see this often in the telecommunications and hospitality sectors. A network of 10,000 fake accounts, each earning just $10 in points, suddenly becomes a $100,000 liability. It's a volume game, and the bots are winning. The system sees growth in user numbers, but the reality is a parasitic infestation that is slowly draining the marketing budget before a single legitimate customer even walks through the door. But simply having an account isn't enough. To get the big rewards, you need transactions. This is where transaction manipulation comes in. Actors will trigger artificial transactions, buying items with high reward multipliers and then immediately canceling the order or returning the goods. If the system isn't perfectly synchronized, the points are credited before the refund is processed. In one case study, an individual managed to wash $50,000 through a retail system, accumulating nearly 1 million points without ever spending a single net dollar. They exploited the 3-day delay between the point credit and the return processing. By the time the audit team caught up, the points were already redeemed for untraceable gift cards. It's a game of speed and timing, where the fraudster is always 3 steps ahead of the legacy batch processing systems that most corporations still rely on today. The most devastating threat, however, isn't from the outside, it's from the inside. Meet Rahul, a trusted middle manager with administrative access to the loyalty database. Rahul knows the thresholds that trigger alerts. He knows how to adjust a customer's balance by 5% without raising a red flag. Internal collusion is the silent killer of loyalty programs. Employees can manually correct point balances for friends, family, or professional fraudsters in exchange for a cut of the proceeds. Because these changes happen within the system using legitimate credentials, they are nearly impossible to detect through traditional means. It's a breach of trust that is often only uncovered when the financial discrepancies become too large to hide. In Rahul's case, he managed to siphon off over $200,000 in points over 18 months before a whistleblower finally spoke up. A trusted employee turned into a systemic risk. Once the infrastructure is in place, the accounts, the fake transactions, and the internal access, we enter the accumulation phase. This is where the digital dust turns into a mountain of value. Points accumulate at rates that defy human logic. We see accounts earning more points in a weekend than a top-tier corporate traveler earns in a year. The patterns are there, but they are buried under millions of legitimate transactions. Fraudsters use point pooling, where small amounts from thousands of accounts are funneled into a single master account for redemption. This centralization is the tipping point. The digital balance swells, and the liability on the company's books becomes a ticking time bomb. The sheer scale of the accumulation is a red flag in itself, yet without advanced behavioral analytics, it often looks like nothing more than a very successful marketing campaign. The danger is hidden in plain sight, masquerading as customer loyalty. Redemption is the final act. This is where the digital becomes physical. The points are converted into real-world value, luxury goods, high resale electronics, or most commonly untraceable gift cards. This is the laundry process of loyalty fraud. A gift card is as good as cash and much harder to track. Once the points are redeemed, the value is gone. The company has already paid the price. In the secondary market, these gift cards are sold for 80 cents on the dollar, turning digital theft into cold, hard cash. We've seen organized rings that specialize in this conversion, operating like a professional logistics firm. They have runners, resellers, and a global network to move the goods. By the time the company realizes the loyalty was a lie, the merchandise is already being sold on a street corner or a dark web marketplace halfway across the globe. The loop is closed, and the fraudster has won. The financial impact of loyalty fraud is often underestimated. It's not just the cost of the stolen goods. It's the erosion of the marketing budget, the loss of real customer data, and the massive operational cost of investigation and recovery. When a company loses $8.5 million to reward leakage, that is capital that could have been used for innovation, expansion, or employee benefits. Instead, it is a dead loss. But there's a deeper impact: the trust of legitimate customers. When a program is compromised, rewards are often devalued for everyone, or redemption becomes more difficult. The loyal customers, the ones the program was built for, are the ones who truly pay the price. They are the collateral damage in a war between the corporation and the fraudsters. The silent bleed of capital eventually becomes a loud cry for help as the margins are squeezed tighter every quarter. Why didn't they see it coming? Because most detection systems are looking for the wrong thing. They look for massive, singular events, the smash and grab. But loyalty fraud is a slow drip. It's 10,000 accounts taking $5 each. To a traditional audit tool, these transactions look perfectly normal. They are within the system's rules. They use valid codes. They happen at normal times. Without advanced behavioral analytics and machine learning, these patterns remain hidden in the noise of millions of legitimate data points. The activity masks itself as regular consumer behavior, mimicking the rhythms of the market. It's a masterclass in camouflage. By the time the slow drip fills the bucket, it's already too late. The system was designed to say yes to customers, and the fraudsters know exactly how to sound like a customer. They have mastered the art of being unremarkable, but there are always signs. Red flags that in hindsight are glaringly obvious. Excessive point accumulation in short time frames. Multiple accounts sharing the same device ID or IP address. Redemptions that happen immediately after a point credit. These are the heartbeat of a fraud network. In our investigation, we found that in 70% of cases, the data to catch the fraud was already there. It just wasn't being looked at correctly. We ignore the small anomalies because we are focused on the big rewards. But in the world of loyalty misuse, The small anomalies are the only thing that matters. They are the cracks in the wall. Ignoring them is like ignoring a termite infestation because the house hasn't fallen down yet. Awareness is the first step, but it must be followed by a ruthless, data-driven curiosity. The red flags are flying. We just need to look up. Consider Priya, a fictional representation of a real-life scenario we uncovered. Priya was a professional shopper. She didn't steal clothes. She stole points. She used a network of 50 accounts to harvest high-value rewards across 3 different luxury brands. She was so good that she was invited to exclusive events as a VIP. She was hiding in plain sight, using the very status the company gave her to further exploit their systems. Priya's story is common. These aren't hackers in basements. They are people who understand the psychology of retail. They know that a happy customer is rarely questioned. By maintaining the appearance of a high spender, Priya was able to bypass the scrutiny that would have stopped a typical thief. She exploited the VIP blind spot, a psychological vulnerability that exists in almost every luxury brand. She didn't just take their money, she took their respect. So, how do we stop it? The answer lies in treating loyalty points with the same level of security as actual currency. This means real-time monitoring, multi-factor authentication for redemptions, and most importantly, cross-account behavioral analysis. We must move beyond simple rules and into the world of AI-driven anomaly detection. The future of monitoring is proactive, not reactive. It's about identifying the ghost accounts before they redeem their first point. It's about auditing internal access with the same rigor as we audit cash flow. The technology exists to close the cracks, but it requires a shift in corporate mindset. We must stop seeing loyalty programs as marketing expenses and start seeing them as financial assets that require protection. The cost of prevention is a fraction of the cost of the leak. The digital vault can be secured, but only if we admit that it is currently being picked. As we conclude our investigation, we're left with a powerful realization. The real risk isn't just one person like Rahul or Priya. It's not just one account or one clever hack. The true threat is the systemic exploitation of human and corporate incentives. In our search for loyalty, we have created a shadow economy that values the points more than the product. We have built a system of rewards that, without constant vigilance, rewards the very people it was designed to exclude. The digital cash leak is not a fluke. It is an inevitability of any system that creates value without creating a corresponding level of security. As you look at your own company's programs today, ask yourself, do you truly know your customers, or are you simply feeding the ghosts? The investigation ends here, but for many, the discovery is only just beginning. The truth is out there, hidden in your data. If this video opened your eyes, like, share, comment your thoughts, and subscribe to Corporate Secrets.